Hi everyone, welcome back to Atrium Research's channel. Today I have the pleasure of interviewing Toby Chu, Chairman and CEO of Global Education Communities, which trades under the symbol GEC on the TSX. We recently initiated coverage on GEC, citing its track record of creating value with its properties and education businesses and growing student housing segment, which is going to benefit from the supply shortage in British Columbia, as well as various government initiatives happening. Thanks for being here, Toby.
Thank you. Good morning.
So Toby's going to kick it off with the presentation, and then we'll get into some question and answer at the end.
Okay. Good morning, everyone. GEC is listed on the TSX. We've been listed for over 33 years. Prior to that, it was a private company which I founded in 1986. So altogether, we have about close to 40 years of operating experience in the education sector. We were the former owner of Sprague College for 18 years. For those who are not familiar with the BC education scene, Sprague College is one of the largest private colleges in Canada. We divested that asset about 3 weeks ago, generated a good return, and now we focus on student housing. We currently have 24 locations, over 170 staff. Projected revenue after the divestiture is about 36 million. Total balance is about 460 million, and including on the pipeline and the development portfolio, we're at about 1.3 billion. Some of the common questions which we'll answer a little bit later, so I'll skip these 2 slides for now. But these are the top 4 I always get asked questions: impact on international students, economic influence on student enrollment, rent control, and how to differentiate GEC versus other PBSA, which is purpose-built student accommodation, and GEC's off-campus student housing. I will answer that later on in the Q&A session. As an overview, we have 14 buildings in the student housing sector, 8 operational, 6 in the pipeline. But just the 6 in the operational pipeline, that comprise of nearly 800 to 900 million that is on the built or at the process of getting rezoning approval, which I'll go in a little bit later. Our growing capacity has 3,876 beds fully built out. Right now, we're 1,300 fully operational, generating about $22 million in revenue. We projected for 2026, plus education revenue. We supply to nearly 60% of all the colleges and universities in Vancouver. So that's about 2/3 of the market. Total of 95 partner schools. We also have 2,400 agents in the around the world, because we've been in the education sector for so long. We established this wide network of education recruitment agents from all over, from Vancouver to Asia to Europe to the Middle East and Latin America. As far as our student housing portfolio is concerned, which may answer some of the question about international student enrollment, we have no vacancy. As of September 1, we have no vacancy. All of our portfolio, 1,300 beds, are sold out. Our background used to be in Sprague College, and we retained 2 divisions, Sprague Language College and Vancouver International College. The reason we didn't want to sell these 2 divisions on top of the Sprague Career College is that we don't feel that the price is correct, is suitable for a sale. In addition to that, it remains as one of our pipeline of students to our student housing properties. So at this point, we'll maintain Sprague Language College and VIC, which is a smaller business college. Compared to Sprague College of 16 campuses, this 2 subsidiary has only 5 locations. Let's look at the BC student housing market. A lot of the audience may or may not be aware, like, what is student housing market? Like, how big is that? Well, just in BC alone, it's 553,000 domestic and international combined. Let's focus on a little bit just about internationals. 217,000 just international students living in BC. Majority of them are living in Metro Vancouver. And UBC, this is 2024 statistics. They have 6,000 on the wait list for student housing. As of September 1, the one of the senior executive from UBC Housing had an interview on CBC radio. 7,000 on the wait list. So to us, like, what shortage? What international student cap. Who cares? As long as they rent 7,000 on UBC housing alone. If you're a SFU student or Emily Carr or Langara College, everyone else, you're not even qualified to stay at UBC housing anyways. So it's way beyond 7,000 students on the student housing waitlist. Vacancy rate in Canada, particularly in Metro Vancouver, is between 0.9% and 1.4%, according to CMHC, the 2024 report. We have only 1,300 on the pipeline, fully operational, and another 2,500 on the bill. So we are far from the ability of filling the entire demand. Obviously, some of these 500,000 students may be living at home, but having said that, international, 217,000, they definitely not living from home, they're renting from somebody. Plus the 500, the remaining 300,000 domestic, at least 1/3, is my estimate, still want to carry out the college university experience by living away from home. So that's the supply and demand. Unlike other industry, we are getting a lot of pressure as BC is in the housing crisis. I mean, nobody's going to dispute that. So the federal government, the provincial government, and the city municipal government all put in some sort of incentive to induce more developers to build more student housing. So that's sort of a proof that supply and demand is a big problem. For example, federal government, GST is completely removed. 5% doesn't sound like a lot, but each one of our property is over $100 million worth. And the whole portfolio, like you're talking about hundreds of millions, of 5%, we don't have to pay GST when we buy them, build them, or even sell them. So there's no GST. CMHC announced a huge increased budget for the CMHC funding, which is about 40 to 50% less expensive than your conventional construction loan or mortgage loan. So if the market is 8%, we're running at about 3.5% in terms of interest rate. ACLB program and loan to cost, all those are incentive. The provincial government also throwing in a big incentive. This was approved a year ago, Bill 47, which means you can double the density if your property is within 200, 400, or 800 meters from a subway station or major transportation hub like a bus depot. We have several of our properties are right next to the bus station or within 100 meters. That is about one block. So all of our current properties qualify for the Bill 47. A good example is our Langara Campy 49th Avenue. We bought it 2 years ago, just before Christmas, based on a rezoning approval of 10-story. After we bought it, Bill 47 came out. Now we're allowed to build, approved by the city, by the way, to 26-story. So double and a half of our valuations. City also waived a bunch of fees like, CAC, what we call Community Area Contribution, DCL, and all those, all in an effort to increase or to induce the developers to build more property for rental. Our business model is slightly different than your typical thinking of a condo developer. A lot of them around, everybody's building condos, townhouses, or houses. The problem of that model, at this point anyway, obviously it's been a good market, and then we face this, the real estate slowdown. They pre-sell you something at quite $1,000. Then they go and build. The cost of construction was at about, say, $800 with a 20% margin. And then interest rate gone up, and then the tariff threats, and then the cost of construction all gone up. So they sold you something at $1,000. The cost now could be $1,100 or $1,200, losing a lot of money. So that is the problem with the current state of the real estate economy. We build something, we rent them out, we keep them. If the market is at $1,400, we're not going to be selling it yet anyways, because we're going to stabilize it. Or if it's at $800 below our cost, even better. So when we build something, we buy something, we build it, we fill it, which is item number 3 here on this screen. Once you fill it, if the market is good, we sell. If the market is not good, we continue to collect rent. That is the expectation from our investors. And this model allows us to sell only after number 4, stabilization. After we stabilize, then we consider selling if the price is right. Student housing market, again, this will self-explain some of the questions, commonly asked questions about international. Think about this. International students arrive to Canada, they need to rent a place to live. We are there to provide the housing. If the international cap by the federal government to slow down international students, who we serve are students already in country, already arrived in the last several years. So we are supplying them. That's number one. So we're supplying to existing students already living in country. So yeah, the pipeline may slow down, but that's a few years down the road. A lot of students coming here to study diploma for 2 years, undergrad, master degree, they are 4 to 6 year undertaking. So this is a 5-6 years problem. We already got over 1 million international students living in Canada. So second, the most important thing is Canadian students across the country coming to Vancouver to study, they also need a place to live. And that's why on here you will see that the Canadian population within our portfolio in 2024 versus 25, basically double and a half. Whatever made vacant by international students slow down, fill it up by Canadian students. As long as they pay rent, we are just as good as we're just a landlord. We provide services. So it did not impact us whatsoever. And also country mix. We keep track of our statistics on students. Yeah, some countries get a little tighter on international student enrollment. Some countries are a little bit more relaxed, like Japan, Korea, United States are all increasing in our portfolio, and Canadian students continue to grow in our housing portfolio. We also use a little analogy. All this school out there across the country is competing on a gold rush, digging for gold. We're the shovel supplier. We just supply them the shovel to go dig the gold. And as long as you're a school, you have students, you need a place to live, we provide them. That's what we do. Just a snapshot of like UBC, SFU, and all these universities and colleges are using us as student housing providers. Some may ask, oh, what about UBC, SFU? Don't they have housing? Yes, but like 7,000 on the wait list. It's kind of a moot point. SFU has 2,500 on the wait list. Capilano is just not enough. BCIT had a most recent news release. They're completely full. The rest you see on this screen, they do not offer student housing, period. Okay, so that's sort of, again, another moot point. Student housing Metro Vancouver is same as regular rental housing. I think Toronto, Vancouver, all facing the same thing. Rent control impact. If I'm a rental landlord, rent control in BC this year, 2025, is 3%. Next year, it's been announced in BC is 2.3%. I mean, to be frank, my garbage disposal, my property tax, my insurance all went up more than 6 to 8% this year. The rent control of 2.3% next year is just not a very good incentive for renting out to, for developers or investors to build to buy into rental properties. But that doesn't quite apply to student housing, not just to us, but across the country. Rent control policy applies to 1 year or longer lease terms. Most students enroll only about 10 to 11 months, and they go home during the summer to save money. So when they come back in September, they sign the new market rates. So that's a reason why rent control policy does not impact the student housing as much as people think, oh, wow, they will sign a 4-year lease. No, students do not sign 4-year lease. They want to save the 1 to 2 months when they go home, and then they come back in September. The amount they save for not paying rent for those 2 months is actually more than, whatever the rent control increase the following year. Our rate increase this year is between 5 to 8%. All other landlords for rental apartments, they are limited at 3% this year and 2.3% next year. Development timeline, it takes like up to 7 years to build anything, from permit, buying the land, design, construction, and delivery. So that is going to be a huge pipeline shortage coming down. Permit decline, like talk about historical statistics. Between 2022 and 2024, building permit pipeline dropped 65% in the city of Vancouver. Why? People are just not building. There's rent control, uncertainty of the U.S. tariff issues, construction material costs, as well as interest rate. Interest rate just stopped dropping 4 sessions ago. So there's no incentive. The pipeline dropped 65%. So a sophisticated investor would think, what will happen when the pipeline stopped? So let's leave that to everybody's consideration. And we in Vancouver remain to be the top 5 most expensive cities across Canada. I think last month Markham went up to one of the 5, and then they came out again. All 5 are in Vancouver, top 5 most expensive. Market demand, I explained that already, so I'll skip that. Our approach, we're completely follow the law, BC Tenancy Act compliance. Again, like I mentioned, 12-month, 11-month, 10-month. So that falls outside of the 12-month established policy for rent control. And we also work with different university colleges to make sure their students get their respected rights, make sure that when they're out, they don't have to pay rent. And after 2 months, we usually rent it to summer camp students. Okay, so we're covered for the 2 months when they are not around. We are student focused, very focused on just that community. Not that we disrespect any other rental tenant. We just have a long wait list within our property, so we just focus on what we do. And we have partners of like 79 schools, 2/3 of the school in Metro Vancouver using us as a housing provider. So it's sort of by default, it's all pretty much student residents. Also diversity, we're also very cautious, make sure that we don't have one particular ethnic group within our own residence. We have Canadian students and students from 79 countries. That is also a investment risk profile control. We do not want to work with one particular group. Maybe at 1 year, huge growth. Second year, of any political reason, it can be a big drop. So we're very cautious of that. Okay. We also don't work with one particular school in one particular town or one particular city. Again, we do not want to put all our eggs in one basket. Some operators in other part of the country or in the United States, their business model is this is Sacramento, for example, and they would build a huge property just for UC, University of California, Sacramento, or Irvine, or Riverside, etc., etc. So we are very cautious. We don't do that. We stay on the subway station. We supply to 90 plus schools across the Lower Mainland. So we have a balanced portfolio. Fully equipped. Our model is making sure that the student can move in with a pair of luggages. When they leave, they move with the same pair of luggages. They don't have to sell their furniture, buy all the utensils, toaster oven, coffee machines. Everything's turnkey, including beds, bedding supplies. Everything's included, fitness facilities. So it's a turnkey operation, a lower cost model than a hotel. Just think about hotel. You go in there, everything's there. But we lower the cost. We do not have daily housekeeping, but we do provide bi-monthly housekeeping, like every 10 days. Why? One, we want to go in and check the properties. We want to make sure that the properties are clean, the sinks are washed, the bathrooms are washed. That way, I still have an apartment left after 1 year, right? We all been young before, renting to anyone. Just here's the key, see you in 1 year. It's just not what we do. We make sure we go in there and clean them so that the counter will not have a coffee stain sitting on there for 1 year without being wiped. So that's why we also have the in-house housekeeping team to handle all that. We have our own in-house security. Our surveillance cameras all over every property at the open area, the public area. We have a security staff at our headquarters monitoring all the stations by motion detected cameras. Typical rental apartment has 24 cameras. We have 75. Just on one property. We are always by the transit station or the subway stations. On-site support with caretaker full-time there every day. We also have resident advisors. Home is one of our students living there to help students if they check in late. How do you use the microwave oven? Hey, don't laugh. There are people who doesn't know how to use microwave oven, how to use a washer, dryers. We have all those on YouTube video for every property, how to operate a Bloomberg or Samsung or LG washer or dryer. one of the things we're really proud of is our community events. We have monthly events like from GEC Soccer World Cup, talkback creations, contests, students networking with different countries. We also even offer student counseling. What is student counseling? Well, sometimes when you have a kid living, first time they leave from home from Japan, for example, just an example, never been away from parents. It's Christmas, it's New Year, it's Chinese New Year, all that, it's mentally challenging sometimes for homesick. So we also provide student counseling by licensed professionals that we engage if such help's needed. Fortunately, we don't need a lot of those help, but it shows how much we care. It's a community. It's not a place with a key and, four wall, ceiling and carpet. We create community. Do visit us on YouTube under GEC Living is the handle. We have over 410 YouTube videos. Some of them have 10 to 15,000 views, and we upload every 2 to 3 days with all kind of events. So that shows the difference between living at GEC versus just a rental apartment. Flexible lease terms, that's important for students because not everyone comes with tons of money. If I have to stay there for 12 months, I've got to pay 12 months of rent. But if they can go home during the summertime, they do that. So, we save them on the rent, and then we have summer camp students coming in anyways to fill up the properties. So those are important. So that is sort of a macro picture of our portfolio. On the left is the operating properties. On the top is just the services we provide. On the right is the social media. We have a very strong social media platforms. Look at June to July, despite all the talk about, international student cap and all that, we went from 60,000 views to 165,000 views in a matter of 60 days. That's why our properties is fully occupied. And then this is the projects in the pipeline. GEC Oak Ridge on the top left, already under construction. We are at the ground level, another 18-story to go, and then we'll be launching that in 2027. That generates about $8 to $8.5 million rental income. Langara has been approved from 10-story height to 26-story, 25 plus 1, so it's 26, and that's sort of almost double and a half of our volume. Our projected revenue for GEC Langara was approximately 3.5 million in rental income. The approved density is now generating 11.5. So 3.5 million rental income, same piece of land now 11.5. Education Mega Center is one of our flagship projects, starting construction by 2026. And that's going to be the first education mega center in North America. The rest are all under construction or development. So I'll skip right to the mega center and then I'll wrap this up. This is just some of the pictures, how we set up our properties, fitness centers, coffee pots, conventional states. This is our King Edward project launched 2 years ago, full. There's no beds available. 3-to-1, 2-to-1 bathroom ratio. We don't go beyond that. You won't get 20 students crowded into a basement type of news out of the East Coast Canada. No, we manage everything. We're going to make sure that the ratings are positive, and our school partners, the director of housing, visit our properties to make sure that everything is clean, safe, and convenient. You'll notice that on here, we do not use bathtubs. I don't think too many people are too keen on sharing a bathtub when they have 2 persons living in the same unit or 3 persons living in the same unit. So we use stand-up showers, but lots of space. Kingsway we launched 1 year ago, and now full furniture's fully included. Oak Ridge underbuilt. Langara is by the subway station, as you can see here on the right bottom corner. The building on the right is the subway station, and the bare lot is actually our property. So they'll be starting construction next year as well. Student residence. Here's the Education Mega Center I talked about. This is going to be a flagship and a catalyst for the companies going forward. This is going to be a $330 million build with 40 floors of student housing, 2 floors of amenity on the top, and then with 3 floors at the lower floors at the podium level for market rental for teachers, instructors, professors, and staff working across the street from where we are located, and just a couple of floors of offices. So we all know offices, commercial are a bit of a risk nowadays. That's why we compress it to only 2 floors out of 49 floors. So to reduce our risk. And across the street, I think most important is where this thing is located. You can see GEC property on the left. Simon Fraser University, the second largest in British Columbia, is about 100 meters away. And then across the street, 1 minute from the future SFU Medical School, starting construction this year. Surrey Central Mall on the left, 1 minute to the Surrey Central SkyTrain station, and 2 minutes from the Kwantlen Polytechnic University. And then at the bottom, you can see 8 minutes walk to future UBC Surrey. So this is downtown central. You can see Education Mega Center is actually right across the street from the Surrey Central SkyTrain. So you can be living in Vancouver or working or studying in Vancouver and live here as well. But just within here is called the Education Hub of BC. And there's all this school we talk about here. Everyone you see, SFU Medical School, SFU, KPU, besides UBC, they will have some housing. Nobody on this screen offers housing. We spoke with this the housing director of this neighborhood. They are looking at about 25,000 students studying in this area. Ironically, 0 housing. We are the only one with 1,386 beds. Ready to build, completion in about 42 months. Unit types, amenities is important. Video conferencing room, meeting room, yoga room, fitness centers, what we call the quiet study lounge, coffee shops, etc. So that gives you a macro picture of who we are and what we do.
Awesome. That's a great overview. Appreciate that.
Yeah.
Okay, so let's move on to some Q&A. So the first thing we wanted to talk about was the international student cap and how that's affecting you guys. Maybe speak a bit about that and where you see things going over the next couple of years.
Sure. Number one, international student cap has minimal or no impact. Just looking at our vacancy rates fall. So we don't feel any impact for a couple of reasons. One, we supply to 95 post-secondary schools in the Lower Mainland, and this school serves Canadian students and international students. So when the international is not here, the domestic student takes over. So that's the end of that. And also the diversification is one of our huge strategy. We always want to make sure that we have that diversity in our system. It's now proven to be correct. So yeah, it's no impact for us.
Amazing. Okay. And then on the rental control, I know you talked a bit about that, but how do you see that playing out as you guys can bear that increase on a year-to-year basis? How does that kind of affect the revenue in the model for the company?
Yeah, so far, again, there's no impact, not just this year. Rent control in British Columbia has been around for, 7, 8 years, even before COVID time. At the time when COVID hit, rent control policy was 0%, no increase for 2 years, and then went to 2% and then 3% this year, and then down to 2.3%. None of the year ever impacted because the policies is very clear. Rental contract of 1 year or longer. Yeah. Our contracts are 10 months. Student wants it, we offer it, they save money, everybody wins. So, we don't have an impact on that.
Got it. Okay. And for a student, from their perspective, there are a lot of different options between staying at home, on campus, GEC. Tell us about the different options and then why you think people end up at your facilities.
Sure. For students coming to study in Vancouver, whether it's from across Canada or international, number one, a lot of people know it about is homestay. Homestay basically means I have a house, my kids move out, I rent out the room to the students to help mortgage. So it's homestay. The problem or the sort of concern for students is that we service college university students. Most of them do not want to move out of one family, one parent, and move into another parent. So that's number one. They also impose curfew. So you need to be home by 10 o'clock. For college university students, they want a little bit of flexibility. They may be studying late. They may be arriving back to the homestay family at 11 p.m. So that's a problem. On-campus housing, kind of a moot point. Two biggest university, UBC, SFU, one has 7,000 on the wait list, one has 2,500 on the wait list. The third one is BCIT, they already said it's full. So kind of moot point. There will be ongoingly on a shortage because the policy of BC government is that public institutions are not allowed to become a real estate developer. If they build 10 faculty building, they may be allowed to build one student housing. They cannot have 10 student housing property and 2 or 3 faculty buildings. Those has to become in the balance. And BC government institutions like UBC, SFU, Emily Carr, etc., they are not allowed to borrow money without the provincial government approval, which makes sense. I mean, the government, they just don't want to wake up next morning, wow, we have 500 billion on liabilities, because all the schools start building housing. So all those are not sort of going to be enough for on-campus housing. So we become off-campus. Conventional rental apartments, not a competition. They usually just rent you a ceiling, floor wall, and a carpet. We provide all other service above that, and you sign a 1-year contract with the rental landlord, and they see you in a year. So the quality assurance and all that are just not there. Here's the key, see you, and then make sure that you keep it clean, and they see you in a year. Off campus, that's what we do: weekly housekeeping, advanced security, prime locations adjacent to public transit, and all the amenities. So that's the difference between us and community events. It's always very important. So our students make lifelong friends living at GEC.
Yeah. Okay. That's great. And then I guess there's 2 different types. What you guys do is student-centric housing versus purpose-built student accommodation. So tell us about the distinction and why you guys have positioned yourselves as just student-centric.
Yeah. We learned that since day one, 10, 11 years ago when we started. We do not want to be branded as a purpose-built. Unlike other sort of competition in the East Coast, we have no competition in the West Coast, by the way. We're the only sort of meaningful student housing player. When it comes to the city policy, most cities, including Vancouver, they just simply do not have a student housing policy. So when it comes to financing, lenders, banks, like, what is student housing? So it's number one, it's become a problem. Number two, when we exit, I want to have the flexibility we build rental apartment, we use furniture to make it student-centric. All these value-added propositions, so that when we exit, I can exit to a student housing buyer. I can also exit to a market rental buyer who just, okay, I don't know about student housing, I'm going to buy your properties, I'm going to be renting it out to whoever, however. Yeah. That's fine. We take our furnitures out. There you go. You got your regular rental apartment.
Right. Well, that makes sense. Okay. And then on the divestiture, you guys have a nice cash balance now following that. What's the plan moving forward to allocating that cash?
Yeah, in today's environment, cash is king. So we receive over 35.5 million in cash. Number one, we want to pay down some debts. We want to be able to strengthen our balance sheet, lower the interest expense, as I mentioned earlier. Interest remains to be at 5.75% at prime rate. So yeah, we want to pay some of those off, which we did, and then look at new opportunities. In today's environment, there are lots of properties, foreclosure properties, undervalued properties available for sale. We want to increase our ownership and our portfolio using those cash, which is, again, king in today's environment.
Absolutely. Okay, no, got it. And then I guess with the remaining educational assets, do you foresee selling those to become more focused on the student housing, or what's the plan?
Yeah, that is definitely our focus is student housing expansion. So over time, when the international student enrollment cap is gone or reduced or getting better in the market conditions, we'll definitely consider that. Looking at our history of the past 38, 39 years, we buy, we build, and we do not sell at a discount. It's not working, we fix it, we maintain it. Enjoy the cash flow until the market comes around. If the price is right, reasonable, we would sell it, and then we remain more focused on our student housing. Right now, the language schools becoming a smaller portion of our portfolio, which is about $10 million in revenue. On the big picture, it's very small. So we'll continue to grow it, just nursing it back to health, let it do what it normally does, and they continue to feed student to us.
Great. Okay. And then I guess with a lot of these projects in the development stage, like EMC, you guys aren't working on them alone. There's partners involved, peer group, as well as Palmerlow Capital on some of the other projects. Tell us about that partner network and those relationships and how they help you guys bring those projects to life.
Sure. We are involved into a, very costly, into hundreds of millions dollars of undertakings like acquisitions, constructions, developments, etc., etc. Needs a lot of money. And in the earlier days, we were small. We were not recognized by sort of the institutional investors. During the past 12, 14 months, we're fortunate enough to be now recognized by major institution and investment partners. That's number one. Number two, we do not just want to get, hey, this guy has a deep pocket, let's work with them. No, we want to make sure it adds value of what our plan is going to be. So Palmerlow Capital from Montreal become one of those partners. Palmerlow also owns ITC Construction, which is the third largest construction company. So when it comes to developments, constructions, they are adding value through their expertise and experience through ITC. So when it comes to fundraising, additional capital requirement, Palmerlow is a substantial company, and they also have a strong backing from Quebec Pension Fund. So with all this in mind, we find that they are one of our best strategic partner, not just a financial partner or construction partner, but a strategic partner. That's number one. The second one is pure multifamily REIT. People go through their history. They've done a great job by putting together a substantial industrial REIT, REIT. They sold it to Blackstone and Ivanhoe Cambridge a few years ago for $3.8 billion. So their expertise is capital market, fundraising, how to take our portfolio in the future to put it into potentially a REIT. And that helps us, again, not just the financial side, but the expertise, experience in the capital markets. So that's where we're coming from, what we call strategic partners. So those two are strategic partners, Peer Group and Palmerlow Capital, and then, of course, the subsidiary ITC Construction.
Okay. Well, those are great partners. Um, yeah, just wrapping it up here, what are some catalysts that investors should be looking out for over the next couple quarters?
I think unlike technology development business, they invent something. Or that's something they are planning to invent may never come, maybe just for whatever reasons, capital or technology. We are in a student housing business. A couple of things to keep in mind. First is no matter how bad or good the economy is, parents still send their kid to school, they still pay their tuitions, and they still live in a student housing. So that sector will always be countercyclical, whether it's good economy, bad economy, people continue to go to school. So that's number one. We'll very focus on that. But we need some, like, what is the next big catalyst? Some of our launching parties, like, Oak Ridge being launched, Langara being launched, Education Mega Center, which is going to add $25 million rental revenue, is going to be launched. So now business is very predictable. You can see what's being built, what's going to be rented out, what the rental income is going to look like, and there will be ongoing growth. And hopefully the Canadian real estate market, which I don't think it would, blow up. I mean, it's already at its low. When the market is low, we buy some more. When the market is high, we may sell some. So that's the kind of investment compared to like a technology company. Oh, I just invented something, it hit the moon. No, we are very steady, very predictable, one step at a time business. And that's why this REIT, REIT, people want to put their money into investment where it will see growth. And real, as they always say that, it's real, not fake. So that's our plan going forward with big projects approved, ready to build, or in the process of being built. That is our catalyst.
Got it. Okay. Now, all right, Toby, thank you for the time walking us through the deck and the Q&A. We're excited to follow along with the story and provide some more insights for our followers and all these updates that are going to be coming out over the next years. to come. So for our followers, if you haven't actually seen the research on GEC, it's all on our website, atriumresearch.ca. And again, thank you for the time, Toby.
Thank you.